In 2 weeks, India is officially going to stop using COMEX prices for silver, and India is the second, or some say the first biggest consumer of silver in the entire world. The mainstream financial media is completely ignoring the massive structural break that this is causing. They want you to believe that the New York and London paper contracts still dictate the price of precious metals. But the East is actively breaking that 356-to-1 paper to physical silver ratio. 356-to-1. That is how much fake silver exists in the West. And the Western pricing illusion is about to collapse. My name's Nick. I've been a professional investor and unprofessional trader for 24 years. Before I start, I'm not a financial advisor. This is not an inducement to buy or sell any assets. And most importantly, do not take financial advice from some random dude on YouTube. Right, let's figure this stuff out together. For decades, the global silver market has operated on a highly lucrative illusion. Wall Street banks trade millions of paper derivative contracts every single day. They tell you that the prices at COMEX and the LBMA in London are the ultimate authorities of what an ounce of silver is actually worth. And retail investors just accept this as, a natural order of the financial world. They assume that the price of paper must reflect the physical reality and the reality of supply and demand. But the catch is that Western markets are overwhelmingly settled in cash, not in actual metal. So if you hold a paper silver contract, most of those contracts they're not redeeming real metal. They're just being traded for cash. It's a system designed to suppress the price, suppress price discovery rather, and trap retail wealth, allegedly, right? But here's the bigger problem. The physical market in the East is finally calling the Wall Street's bluff. On April 1st, 2026, a new mandate from the Securities and Exchange Board of India goes into effect. SEBI is forcing all Indian mutual funds to completely abandon the international LBMA pricing benchmark, which is related to the COMEX pricing. So they're abandoning the London and the New York pricing system, right? Instead, they must value their silver holdings using domestic spot prices from Indian exchanges. If you don't understand why this is a financial earthquake, let me translate this for you. India imported a record-breaking $9.2 billion worth of silver last year. The import value surged by 128% in a matter of months. Now that trillion-dollar institutional asset base is going to be priced based on local physical demand. They are disconnecting from the paper matrix. When you need real silver for solar panels, you can't build them with COMEX paper contracts, right? You need actual bloody silver. And the physical drain on Western vaults is already accelerating at a terrifying pace. In the first week of January alone, 33 million ounces of silver were pulled directly out of COMEX vaults. Registered deliverable silver has plummeted down to roughly 78 million ounces. The vaults in COMEX are being drained. Meanwhile, the total paper open interest is sitting at 575 million ounces, right? And that's just COMEX, right? Actual estimates of the entire paper to physical game are 356-to-1. So for every real ounce of silver in the West, there's around about 356 paper claims just floating around out there. It's a giant game of financial musical chairs, and the music is stopping. And you won't hear about this structural collapse on mainstream media networks. Look, the public message and what the smart money is actually doing are two completely separate things. And that's exactly why I use Ground News, who are sponsoring today's video. When the big banks push a unified narrative, you need to see the full picture of what's actually going on to avoid getting trapped. Ground News lets you compare how a single story is covered across the entire political and financial spectrum. You can instantly see the bias, the factuality, and the ownership breakdown of every article. And right now they are offering 40% off the Vantage plan, which is the plan I'm on, which unlocks every feature including their blind spot detection, which is very important. Use the link in the description below and get a deal to cut through all of the noise. Anyway, let's talk about exactly what the smart money is doing while the media looks the other way. It isn't just India breaking the Western benchmark. China is already doing it too. Over on the Shanghai exchanges, physical silver has been trading at a massive premium over the London spot price. In early March, that premium spiked up as high as 27%. That is a $23 per ounce gap between the Western paper price and the Eastern physical reality, right? Chinese manufacturers are paying a massive premium because they know the global market is in its sixth consecutive year of a structural supply deficit. We are short roughly 67 million ounces this year alone. The absolute worst part is the hypocrisy of the major Western banks. Take JP Morgan, for example. Their global research division just put out a forecast predicting that silver would average around like $81 an ounce in 2026. They are telling their retail clients to expect prices to be moderate and stabilize, but what are they doing on their own internal trading desks? they are aggressively taking physical delivery of silver. Recent COMEX data showed JP Morgan issuing 99% of the delivery notices for 8 million ounces of silver in a single month. They publicly tell you that the price is stable while privately draining the vaults of real metal. They funnel the paper risk to retail while hoarding the physical assets to themselves. It's a system designed to suck you dry, to suck retail dry, allegedly. The East is finally demanding real silver and the West is running out of metal to give them. When that 356-to-1 paper ratio finally snaps, the exchanges will just force cash settlements and leave you holding worthless digital IOUs. And that's why my plan's always the same, guys. Look, I'm sitting on my hands. I'm avoiding the Wall Street paper traps entirely. I stick to hard assets. I'll see you in the next one.